Hello ladies and gentlemen, Greg McCloskey with the Kickstart video for today, July 17, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. And we're a day away from the ECB rate decision, where they're expected to not do anything, and we're seeing the euro versus US dollar move to the upside here ahead of that meeting. The U.S. dollar is down sharply today as sellers in the stock market seem to be pushing the dollar lower. Also, maybe some concerns about the trade war is weakening the greenback with a Trump presidency. Anyway, what we're seeing in the euro versus U.S. dollar from a technical perspective is the price moving to a new high, going back to, well, I guess back to this date right here, which is March 14, 2024. We broke a little bit above this high right here from March 21st. So extending to the upside, stretching to the upside. And in the process, we also moved above the 61.8% retracement of the move down. I have to go back to this point right here, which is a high from end of December to the low price that we saw in the month of April. That 61.8 came in at 1.0933, and as you can see, the price is trading right around that level after breaching it just a little bit and moving back down and then rotating back to the upside. In the process, we also moved a little bit above this high right here, as I mentioned earlier, on the 21st, but now trying to extend even further to the upside here for this currency pair. Next stop on the top side comes in at 1.0963. Above that, 1.09812. That's a high price going back to March 8th. The high price for the year is actually higher here. Let's see, right around here, the first day of the trading year to be exact. That came in above the 110 level. So there's ways to go before we get to that level. But certainly the buyers are making a play here in the euro versus US dollar. What I posted yesterday late in a video was the catalyst for the upside was this move down yesterday to test the 50% retracement. What did? We found support buyers against that level, started to move back to the upside, and in trading here today, the extension was finally made with some momentum in that upward direction. So the 50% retracement, that, by the way, is of the move down from the December high to the April low. So getting above that level and staying above that level was a key tell from the market from a technical perspective. Admittedly, the price had traded above and below it during all this period right through here. So the ability to hold that level was something new, and I posted about it in the video yesterday. So good for those who bought onto that argument. Let's take a look at the dollar versus yen. And what we see in the dollar versus yen from a technical perspective, looking again at the 4-hour chart, is this high prices, these high prices that we saw in yesterday's trade right here, stalled right near the 200 bar moving average on the 4-hour chart. That was another key tell for the market, and the market quickly rotated, or not quickly, but rotated back down, fell below the 50% retracement level right through here, and gained momentum to the downside and trading here today. Recall that we had been using this swing area from the last trend move to the upside, and that 61.8% retracement did hold once, twice, and in trading earlier this week, we did break below that level, as you can see right here, but quickly rotated to the downside. This time, not so lucky. This time, not so lucky, I should say, and the price fell with momentum to the downside. It's now time to move this Fibonacci down, perhaps to this level right here. This is a low level that took the price below the 100 and 200 bar moving average and based the price before it started this trend line to the upside right through here. And you can see that the low price in trading here today did find a nice support target against 38.2% retracement and just above the 156 level. 38.2 comes in at 156.018. So there's reason for traders to stick a toe in the water right here. As most people know, when you have a trend like move like this, I like to see the price move below the 38.2% retracement to show that the sellers mean interest. So we do need to get below that level. If we do, then we're going to start to look toward these lows right through here. These swing lows make obvious sense, and also, but longer term or a better target would be the 50% retracement at 154.19. So watch that level on the downside for the dollar versus yen. Honestly, with the break lower in trading here today, we should not see the price move back above the, I would think that the low price from earlier this week at 157.11. So although the price is bouncing back higher here, watch for sellers against that area if it should get closer to that level to rotate back to the downside. That's my view on the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. Start by looking at the daily chart, and as you can see, we the 129.95 level stalled the high earlier this week and last week. That level corresponded with this swing high going back to this day right here. The high price on Friday, the high price on Monday, both came near that levels and rotated back to the downside before breaking to the upside and trading here today with momentum. We're above the 130 level as well, currently trading at 130.32. So the buyers are making a play in here and looking toward the high price that we saw in July of 2023 at 131.41 as the next key target on the top side. That's on the daily chart. Let's take a look at the 4-hour chart. And the momentum to the upside was enhanced by the breaking of this top side trend line, which had a different high right here, a high right here. We did move a little bit above that level through here, just by a few pips, but you can see the problems that the market had in getting above that level, rotated back to the downside before moving higher and trading here today. The CPI data of the UK was a little bit higher than expectations and puts into question a August cut from the Bank of England. Service inflation continues to remain high, but goods inflation coming down. Nevertheless, that is helping to propel the pound versus US dollar to the upside and above, again, that 130 level. It'll take a move back below this trend line, right around the 130 level to disappoint the buyers on the break higher in trading here today. So that's my Kickstart video for July 17th. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.